Good afternoon, this is Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 7th of January, 2007. The market's closed, and we had kind of a mixed market here today. We're trying to recover from Friday's sell-off and actually last week's sell-off. And it seems as though the market may have started to find a little bit of stability on the shorter-term time frames. But looking at this daily time frame again, it's just a real mess in here. It's good to see that this low from mid-November was tested and probably shook some people out underneath there, but did recover late in the day from that lower low right there. So, the most bullish thing about this market you can say right now is that it's just sold out so much that it's probably overdue for a bounce. When we look at the shorter term time frame, like the 10-minute time frame, there's still no evidence of that bounce materializing here. We still have a very strongly declining 5-day moving average, and I think that what may happen here is we might set up another MACD divergence over the next couple days. So let's see if we get a bounce, maybe up towards this 144 level that had been at the important support area, and then maybe a retest of those lows before it's able to, hopefully pop back up above 144. But that's a lot of theoretical information there. Right now, the key level of intraday resistance looks like it's about 142.20 or so. And you can see that late in the day we did get some buying here with some pretty good volume as well. So people are starting to maybe step up to the plate here, shorts covering a little bit as the market was unable late in the day to make a lower low in here. And we're looking at the one-day chart. Real choppy trading day, and that's a good sign. Volatility peaks at turning points and diminishes with the trend. So today, this big volatility, we had 1,785 stocks up, 1,377 down on the New York Stock Exchange. So it looks like the buyers are slowly starting to step up in here. The late day rally, wasn't enough to break the 2-day downtrend line in here. But for the session, the buyers did gain control. As you can see that for today at least, the average transaction occurred at a lower level than where the market closed. That's what that VWAP is signaling to us in here. We've still got a lot of problems for this market. So you want to, take a look at, look at these longer term time frames. I had outlined this over the weekend, which is basically, this is a level of where I think that the market eventually has the potential to go. It's got this trend line in here. We've got this prior level of resistance from 2006, and then we put Fibonacci on this low up to that high. You can see it's also approximately the location of the 2/3 retracement. So somewhere down near 133, 136, in that area, that's where I think eventually this market will settle in. But it looks like it's probably due for a bounce and test maybe up towards that 144 level. This market is pretty sold out. It's due for a bounce, but the evidence just isn't there yet. If you're trying to position for a longer term trade, you're still very early in here. This is still time for just very aggressive day traders in here. The market, again, the most bullish thing you can say is that it's just down a whole bunch and probably due for a bounce. And late in the day, we did see a higher low with some volume behind it. So perhaps the market is due for a bounce, but just be very cautious. The semiconductors had another down day, and looking again at that monthly time frame and change the scaling so we can see it a little bit more clearly. This longer term level still may be looming near the 350 area that was accomplished in late 2004. But this market is getting really sold off too. It's down 50 points in the last 7 sessions. So what is that? About an eighth, 12.5% or so. Big declines in the semiconductors. Still no evidence of a bounce here either. We did see the same thing we saw in the spiders, which is a higher low. The shorter term important level of resistance in here is 375. I think getting above that, maybe the market continues to rally up towards that declining 5-day moving average. But the 5-day moving average is still declining. Be very cautious. As, the people that try to rush into this market and pick the bottoms are the ones that are, and try to be a hero and pick that bottom, are the ones that are going to be doing the most damage to their accounts and spitting it out on reactionary sell-offs. So you want to always be dealing from a position of strength in the markets, and that means waiting for the evidence to show that the buyers are back in control. And again, when it gets this volatile, the real play is day trades. I mean, it's a fantastic environment for day trading. If you're not an accomplished day trader, then you ought to probably be sitting on the sidelines waiting for it to settle in. The IWM, let's take a look at the bigger picture here again. What we've been focused on for months is this 73 level. Let's see what happens on any bounce. In here today, you can see that it created this doji, which means the open and close were basically the same price, and people view that as a bullish sign. In particular, when you saw the big volume in here. What we need to see realistically, though, is a move above this level, about 72.90. Above 72.90, then we can add a higher high to this higher low we see right in here. And again, late day, we had bigger volume coming into this market. So that big volume a lot of times stamps a short-term turning point. Getting above this this 72.90 level, maybe we get a test of that 5-day moving average, a pullback, and then we can go on to test larger levels up near this gap and even where these moving averages are. I still think it's a possibility that we can see this end up being a trap and then a rally up towards that 76 level, and who knows what happens when we get up there, if it gets up there. But right now, it looks like the market is slowly starting to transition. We have the shorter term moving averages crossing over. We had that over here as well, but it wasn't time to buy, and it's still not time to buy yet. The downtrend is firmly intact. The best thing here is for this market is the higher low, and that's really the most bullish thing that happened, is that the bulls were able to defend these lows late in the day, and that signals that perhaps there's a chance that we're closer to a turning point. When we look at the Qs in here, the Qs broke down through their support at 48.50. They had been in that range of 52.50 down to 48.50. They're also below that 200-day moving average. We saw big volume in here today, and the biggest volume came right at the end of the day when we had that big, very fast rally in here. So the market rallied. It was back above the daily VWAP. So for today, the buyers were in control of this market. It shows down 23 cents or 0.5%, but the average transaction occurred at about 48.10 with a close of 48.17. Most transactions are profitable, and in particular, you want to see this late day strength, as they say, the pros buy the close. And here again, we saw that the morning lows were not met, and that's when people rushed in and bought this market, anticipating the possibilities of a turnaround. It's still not there yet, but it's almost looking like common sense that the market should bounce here, but the market tends to reward unconventional wisdom rather than common sense. So don't base your decisions on hope and what you think should happen. Watch the market, let it tell you what to do, and for now, 48.65 is the shorter term level of resistance that if the market breaks above will accomplish a higher high to add to this higher low and give us a little bit of relief at least here. You can see these little downtrend lines are really what held towards the end of the day here on all the markets. If you look at a 2-minute time frame, they kind of came right up to those levels, and that's kind of what you would expect, I guess, late in the day for the market to end its rally right near there. So there are some encouraging signs, and it seems as though people are just kind of panicking, throwing their stocks away. So be on the lookout for a potential reversal coming. If you're short, start to tighten those stops up big time, and maintain tight stops on longs, because the primary trend is lower, and that makes taking long trades higher risk, except for the shorter term trades.